Good morning, everyone. It's Nay Augustini, CEO of CID Insurance Programs. I want to welcome you to our a new version of our one of our workers' comp webinars, and this one's called Mastering Workers' Comp with Relevant Case Studies. So this should give you some hands-on examples, and should be a great one. I'm going to be one of your instructors today, and I want to introduce Lexi Goldspring, our work comp underwriter, who will also be instructing today as well. Say hi, Lexi.
Hi, everyone.
And then last but not least is Jacob Cole, who's our marketing specialist who works behind the scenes, and he makes everything go smoothly for you and for all of us. So he greatly appreciate it. Say hi, Jacob.
Hello, everyone.
Okay, so let's get started. Of course, we'll start off with the logistics, and many of you have attended our webinars before, so you know the routine. But for those of you who have not, you will be on mute, and you'll be able to hear, but you won't be able to speak. At least we won't be able to hear you speaking. So. And so we really want your feedback. We want your questions. So please pose them in the chat room at any time throughout the webinar, and we'll answer those questions as we go along. And then we're going to offer a short survey at the end of the webinar, and would really appreciate your feedback. So, what are we going to, what's our objectives for the day? So we want to sharpen your knowledge of workers' comp. That's a no-brainer because there's always more to learn about workers' comp in different situations that you haven't experienced before. Always something new. So let's talk about some of those today. And then we're gonna have 3 case studies that will broaden your workers' comp strategies and give you a better understanding of types of accounts that you want to work. And then how to better understand how to use workers' comp. Excuse me, my bar. How to compete in the workers' comp arena, and because it's a very competitive environment, especially when you get into the larger premiums. So let's get started. Okay. First off, I want to spend a few minutes, and we're going to use some case study examples and use small versus large workers' comp quotes. So this is an interesting thing. You know, we want you to understand the difference between small and large workers' comp. So the claims examples will really go into a little more detail of that. But the interesting thing is that a good complete submission, whether large or small, can take the same amount of time and effort to underwrite. So that is one thing to be understanding of, and that really depends on providing the right information for each premium size risk. And so we're going to go into a little bit of that today. And then again, I mentioned it before, you're going to learn about what makes you better than the competition. And one of the things that I've learned as a small wholesaler in the business environment, working against all these very large, you know, E&S brokerage houses that are national, is that, you know, we can be better and we can compete. We just have to be better in many different ways. And that's like, for you, it's no different, providing a competitive quotes at a faster pace, being knowledgeable about workers' comp, asking a lot of questions, being able to analyze their quoting system, or their existing work comp environment, and then being able to provide the right solutions for them. Those are all things that I think that make you more competitive. And then let's start with our first case study. Small business. We're going to start with a small business, and we're going to use restaurants as the classification 9079. And we'll give you two examples. One's going to be a small one and one's going to be a large one. So let's start with Faster Burger. This is going to be a small one, 3 locations. The employee count is only 6. And then they don't have what we call it an XMOD, but it's experience modification factor. There is none because this is a small operation and it does not qualify because of the premium size. And so there is no XMOD. Payroll is $60,000 and it's going to be the 9079 restaurant exposure classification code. And that premium, look at that premium, it's under $5,000. So we consider that a small premium policy under $5,000. And so the one thing about these is you're going to find, that they are going to be, more of a generic cookie cutter type that are going to easily fit. So we have a small walk-up burger restaurant. It's 1 year in business, which not all carriers will take, but we have a lot of markets that will, and they have had no claims. They provided loss history, and there's no delivery or catering exposures and no late hours. So you don't have any extenuating, unusual, or at greater risk exposures here that you would need that might kick it out of being able to be competitively quoted, and it might limit the carriers that you could utilize. So let's talk about small business submissions. So I gave you an example of one. In general, the smaller submissions are easier and faster to quote. Okay? Why? Less information is required. There's usually less class codes. So as you can see, there was only one class code in this because there's not enough employees to actually start to move into less exposure class codes that could be added. There's generally no supplemental apps required. And so now you're starting to see that it can become a faster and easier way to quote because we're not making you get a completed supplemental. And then again, as I mentioned, it's not typically experience rated. So these can go very quickly, and they can be quoted. They could be quoted same day, typically, if we've received the right information. And that we still need the Accord app with with completed in full FEIN number, and in order to get it quoted. But these can move very quickly, and they can be very competitively priced. So what typically qualifies as a small business submission? Well, it's going to be more of a cookie cutter. It's going to fit within a box. It's we like to say Main Street, that it's typically more like a Main Street business or something that is a lower hazard exposure. And I'll tell you that it's the same kind of thing. It's probably very similar to what you see fitting as a BOP, a business owner's package policy. That they'll give you all those bells and whistles of coverage, but there's a narrow box of classifications of businesses that can fit into that. Same thing with small business workers' comp. And then you're going to have lower employee counts. And typically, as I said, they're all going to be they are going to limit to more likely one classification code. And then rates on these are really competitive, just like a BOP. BOPs are super competitive, and they throw in all that coverage on the premium for the premium. And so rates are much lower on small business submissions that fit into the box. So however, there's less room for credits. So you won't get credits on a small premium policy like this. However, the rates can be very, very competitive, and all carriers compete for this type of business. Okay. So what other factors do we want to consider? Okay. we want to, the one thing about this particular small restaurant or chain of three location restaurant is that this account was submitted to when it went into underwriting, we submitted it to all markets. We received quotes quickly and provided a quote the same day because we had received the proper information, and these are very easy to quote, and ultimately bound it within 5 days. So we can be your teammate in moving these kinds of quotes along fast and efficiently. Okay, let's look at the second case study. Now we're going to stick with restaurants, and we're going to look at a larger business submission. Patty's Restaurant. There's only one location, but it's a big location. Their employee count at this one location is 41. That's a lot. And unfortunately, they do have an experience modification, and that is high. We're going to talk a little bit about that, but it's 163%, which means they've had at least, they could be having continuing losses, but because the experience modification rolls, you could be experiencing it from this penalty from 3 years ago. That's just now rolling into the XBOD period of time that is measured. And they're being penalized because of their loss history by 63%, because 100% is even, right? So they're paying 63% more in the rated premium. So let's look at that payroll, 9079. Their payroll is 834,447. So they've got some premium here, and that premium is almost $70,000. So what do we have here? We have a family-style American eatery, full service, no delivery, no catering, no alcohol sales. So this is really okay. So you can run across that, and sometimes there are a lot of restaurants that don't serve alcohol. Also, they have two clerical employees working from a separate accounting office location. Okay, so there's always something quirky. you gotta make sure you add both locations on, and then because if there's a loss with those two clerical employees, you need to have the location added. So let's talk about this. We have a 5-year loss history, 9 claims with net incurred losses of $133,000. So this is these guys really need to get their act together with their loss control. And, with the right carrier, they could get a lot of assistance with that and turn this whole thing around. They have been with the same carrier for 5 years. So that's interesting. And they provided 5 years of loss history. So they provided detailed loss history, supplemental app. They even provided the XBOD worksheet along with the standard Accord app. So what did we do as far as underwriting was concerned? It was sent to several markets, and it was referred for further underwriting review. So all of that, if you've got a good submission, which is what we had here, a complete submission, then we can get it out to our markets. And even if it has to go further on up the chain at the carrier level to get it's for underwriting review because of the losses, right? We have great relationships with our carriers, and we're able to negotiate the ability to get these quoted at reasonable premiums. So one other caveat is that the payrolls were adjusted several times and had to be requoted. That's one thing that can be very problematic, is like if you're coming back to us multiple times with changes in payroll, it just slows down the process. But in this particular case, the overall result was from submission to quote was 5 days. That's great. That's a great result with everything you've got going here, and then the policy bound within 30 days. So that really is a great thing to see. Now, I want to go talk a little bit more about larger business submissions before I turn it over to Lexi. I think this is my last slide. So the types of business that typically qualify as large accounts. So they're the larger employee counts. They're going to be higher risk, right? You're going to there's going to be more, accident exposure potentially. You're going to have higher rated class codes in your larger accounts typically, and so you're going to get into some premium. That's why they get into some premium, and that's why they're called large accounts. A lot of what we see coming in the door is manufacturing and contractors can get into that large state. And they usually will have multiple locations, which you have to be sensitive to because you need to add those. Or they could have out-of-state or multi-state operations. And so that gives you a little bit of an idea. Also with the carriers that offer that we work with for larger premium accounts is that there's many more additional services available. They offer loss control services, claims management, and online resources that you don't get with the smaller business submissions. So that's something that you would want to check with your underwriter, Lexi, to make sure of what services are offered so that you promote that when you go to present to that client. And then a professional presentation is always important. So, and I don't use our presentation to you. Make sure that you're using a work comp presentation formal proposal that actually gives the net rates, because your competition will beat you every time if you're not breaking it down all the way to the net, which would include all of the credits, even the XMOD included. So you get down to the individual rates with every credit applied to it. So, and we have templates on our website that you can get. Jacob can actually send one out. He'll send one out tomorrow to you guys. So without further ado, I'm going to turn it over to Lexi.
Okay. Thank you, Renee. So I'll be presenting our renewal case study where I will be covering the best strategies to retain your workers' comp renewals. As I'm sure you already know, the goal should always be to retain at least 90% of your renewal book. So we'll be covering those key points to be aware of that will also help in the process. And through the case study, we will also cover important factors to watch out for that can impact the policy, and that ties with knowing and also understanding important underwriting information when working your renewal book. And then lastly, just to briefly cover, from an underwriting perspective, audits is actually where I see some of the biggest problems, and we'll go a little bit into that later, but audits are mandated by the state, so all accounts are subject to a premium audit. And it's important to remember when the policy renews, it is not done at that point, but the insured will have an audit that has to be completed for the expired policy. And you also want to make sure the insured complies with that with all the audit requirements. So moving on to our case study. Okay. So I will provide a brief description of the risk and also some background on the account, but here we have an automotive repair shop under the name World Auto Body Inc. You can see the location is in Concord, California, and the location is a key factor to take in consideration because the rate per class code can fluctuate depending on the territory where the business is located. So you'll see that a lot when you're working your accounts. Here you can also see the entity is a corporation, and right away that's a red flag that we have to request the signed officer exclusion forms. The carrier has to have those on file to avoid any problems that could arise on any future audits. So that's definitely something to look for. And then we have the standard automotive class codes, the 8393, which is the automobile or truck body repair, and then also the 8810, which is the clerical. And then here also they have an experience mod of about 120. I'll go into more detail about that, but here you can also see that there is a larger, it is a larger automotive shop. Their premium's around $30,000. And initially, actually, when we bound this account, the insured only had 2 locations and their premium was about $16,000. So you can see the growth within the years that they opened a 3rd location, hiring more employees, and then, of course, increasing their premium. So here we can see they have 16 full-time employees. So because this account is larger in premium, we have to expect it to bring more competition. So prior to renewal, we will take a careful review of important factors that could affect the premium. And these are details that you should be looking for, asking your insured, and also communicating back to us. And I will discuss those in our next slide. Okay, so you always want to consider changes in the exposure. And what I mean by that is some changes could have an impact on their renewal. So you'll want to ask your insured prior to renewing coverage. Regarding this case study, I asked the broker if they were involved in towing or any road repair assistance, if they worked on any commercial vehicles, basically confirming the operations. Is the nature of their business the same from the prior year? And as I mentioned, it's important to ask these type of questions because any changes, they can and they will affect the carrier renewing coverage depending on their appetite. So you always want to make sure you're on the same page. The best way to do this is actually by completing just a standard Accord 130 prior to renewal to have any record of changes such as payroll, location, employee count that could have occurred throughout the year. And our office, we always request an updated Accord 130 from the broker, and therefore we're able to present the quotation to our brokers with updated information. And the reason why I actually chose this risk specifically is because it was a very clean renewal where the broker provided that completed Accord 130 with updated information. We were able to add the location, update the payroll, and then we were able to present an accurate quote. So why is payroll so important? Payroll should be accurate throughout the policy period because as we discussed, the insured will be audited after that policy expires. And if their payroll is much lower during the policy period than their actual exposure, then they're going to end up receiving a large bill when it comes to the audit. So that's something to keep in mind. Another factor to always keep in mind is if on an experience modification, if it's included on their policy. And I personally always pull their risk summary report from the rating bureau prior to renewal. And on the right side of the slide, you can see a screenshot of the risk summary report from the year 2011 until now for World Auto Body Inc. And this is something to review because as you can see, their experience mod is pretty stable from 2012 to 2016. But then due to their claims history, it began to increase within the last 3 years, and we can see they're at 120% X-mod in 2019, resulting in that 20% debit on their account. So this is important information always to review. And then lastly, first, you always want to consider competition. Someone will always be hunting your policy, so it's really important to get your insured to understand that we are looking for other markets also to find the most competitive carrier for them. The goal is we will present a couple of proposals to you, and in regards to this, to World Auto Body Inc., we actually marketed this account around to all our carriers. And we also went back to the incumbent underwriter requesting those additional credits just to meet their target premium to make the insured happy. and we're able to present a lower premium to the broker. So always remember that we will do our best to secure the bind. And then lastly, I said this jokingly, but you always want to find out your insured's temperature. So how are they feeling about the renewal or about the quote you presented? Are they marketing their account to another agent, and are you aware of it? Do they have a target premium? You'll want to ask your insured these questions because in order to retain and also close the renewal, you must have constant communication or there could be a risk of losing the client. And then moving on. Okay, so best practices from a workers' comp approach. It is essential to implement your own work comp process so you can stay ahead of your renewals. Also, you can stay on top of your new business submissions. So our office, we have a renewal process. It's called the 60-30-10 process. And what that means is we actually begin our process of review 60 days in advance from the effective date. And that's when we collect that updated information. I discussed earlier the payroll and we confirm the operations, but also 30 days before the renewal date, we'll present the most competitive quote with a summary of the work that we did or a few quote options. And then lastly, we send that 10-day reminder. We know that you can get very busy, so it's just informing you the renewal is approaching. It is important to treat the renewal like new business and regroup, gathering updated information at that time. So as I mentioned above, we always market our policies to other carriers to find the most competitive quote for the insured. We work with the top carriers in the industry and we hold a very close relationship with our underwriters. So we will always request credits and we'll do our best to present the lowest premium. You can always reach out to me with any questions on a renewal or new business. And I also encourage you to watch our previously recorded work comp webinars on our website at CIDinsurance.com. We focus on many resourceful tools that you can utilize in your office to manage renewals and new business. And we also cover our appetite for new business also, which will be very useful for you. And
Are you done, Lexi?
Yes, passing it on to
okay,
me.
Perfect. Yes, and I like your last one. Know you're insured. Never assume you have a bind order. That is what, that's the one thing that we find with brokers is that they definitely have a surprise attack when they're not on top of their insured and knowing where that insured is at because you never know when you're being hunted. So I'll get another broker. All right. So great information, Lexi. Thank you for sharing that. And thank you all for joining us. We've got lots of tools on our website, and so make sure, and then we've got upcoming webinars, which we'll notify you of, but you can find recorded webinars, just like Lexi said, on our website, and then you can see which webinars will be coming up. We're going to have some new ones that we're doing this year, so that will be something you don't want to miss. Again, contact Lexi at her email or phone number with any questions about workers' comp, and then start submitting your work comp applications today. And we look forward to doing business with you for those that are new, we've never worked with before, and those of you that are working with us now, thank you for your business, and we look forward to doing more with you. All right, everyone have a great day. Thanks for joining us.